Hey guys, it's that Dividend guy here, and I was just searching through some articles as I do every once in a while, and I found one from the Motley Fool that I thought I should just jump into. Three high risk, high reward stocks for your watch list. So these are definitely not buy recommendations. I'm just reading off the list here just to see kind of what they kind of throw out there for high risk, high reward stocks. So let's take a quick look. So the new year's here, and it's time for the foolish investors to reevaluate their risk tolerances and update their watch list for 2020. But how to define the risk? I like renowned investor Charlie Munger's view, which is the guy who helps out Warren Buffett. Using volatility as a measure of risk is nuts. Risk to us is one, the risk of permanent loss of capital, or two, the risk of inadequate returns. Today, I'd like to examine Zillow Group, Avita Medical, and Baidu. These three companies face risks ranging from business changes to new products to macro concerns, but I think the risks are more than balanced out by the promising opportunities. High risk, high reward stocks aren't right for everyone, but keeping some on your watch list means you may spot opportunity when the business is no longer as risky and a stock begins to take off. Zillow Group. Over 14 years, Zillow has evolved from an online real estate database selling and advertising to a huge business offering tools to real estate agents and brokers, originating mortgages and now buying properties. Zillow's taking a big, expensive risk by getting into the purchase of properties. If it works, the company will vault into a new level of market dominance. If it doesn't work, the company could struggle under the weight of properties it's stuck with, which I could totally see that happening. The company's home buying alarm is called Zillow Offers, and it resides in the Zillow Homes division. Homeowners can contact Zillow Offers and ask for a bid. Zillow makes an offer deducting for repairs, closing costs, and other selling expenses. If homeowners accept the offer, they don't have to deal with showings, negotiations, unexpected costs, and other home selling hassles. The only real competition at this point is Redfin, active in about half as many markets as Zillow, but others are eager to enter the market. Zillow's edge is its experience leveraging massive amounts of real estate data quickly in order to make smart offers and leads harvested from its website. Zillow offers is now available in 22 markets, including Los Angeles, the second largest market in the U.S., with about 20 or 2.5 million housing units. Revenue is growing quickly. In the third quarter of 2019, revenue for Zillow Home segment was 346 million, a 55% increase over the second quarter. Comparatively, third quarter revenue in 2018 was just 11 million. If Zillow offers can combine revenue growth and profitability, the risk will be will will be well worth it for investors. So wow, I didn't realize Zillow was buying and selling its own properties. That's kind of cool, but it's high risk, high reward because if it gets stuck, just like if you're a real estate investor, if you get stuck with, 10 properties that you're paying for that nobody's in there renting out, then you have to pay for all of those. So that's what it's talking about. Is if Zillow owns all these homes and then it doesn't actually get to, um, get rental income from those, then it's going to be screwed. It's going to be in the hole. Next is Avita Medical. Hopefully, I'm saying that right. New medical devices are inherently risky investments as they face untrenched competition and potentially liability if the device hurts a patient. But if a company truly builds a better mousetrap, outsized returns are very possible. Avita Medical is a comparatively small Australian medical device company specializing in regenerating skin to treat burns. Its RECELL device was approved by the U.S. Food and Drug Administration in September of 2018 and is officially launched stateside in January 2019. Controversial, or sorry, Conventional treatment for burns is a long, painful process where patches of healthy skin are grafted into the sites of the patient's burns. The RECELL device takes an entirely different approach that offers significant advantages. The device harvests cells from the patient's own skin, then prepares them in a solution that is sprayed across the burn site. Skin regenerates wherever the solution is sprayed. Far lower amounts of healthy skin are required for a successful result than traditional skin grafts, and recovery is much faster. As of today, over half of all burn centers and burn surgeons in the U.S. are trained on the RECELL system, and 56 of the nation's 132 burn centers have placed orders. First quarter 2020 sales came in to 4.6 million Australian dollars, 3.2 million, a 60% increase over the previous quarter. Next step for Vita is to include pivotal trials for the uh, pediatric burn market and pilot studies for the treatment of uh, Vigilo, sorry if I said that wrong, a condition in which pigment is lost from areas of the skin with no clear cause. Next is Baidu, which I've heard of. A Chinese business can be a risky investment. Given the trade war, looser regulation, and government involvement, Baidu is further challenged by declining ad sales and profits and ad pressure from Alibaba and Tencent and other social media and mobile app adoption. But if Baidu's efforts in artificial intelligence work out, the current price will seem like a bargain. Baidu, which runs China's largest search engine, operates in several other fields as well. Besides owning several app, video, and social media companies, it also is leading also a leading AI company. Baidu's efforts include its autonomous driving platform, Apollo, its open AI platform with over 1.5 million developers, and its Duro OS AI voice assistant device. Sorry if I pronounced that wrong. The company is struggling and its financial results have been disappointed over the past year. Baidu saw its stock plunge nearly 70% in a year. The stock hasn't traded this low since 2013, but the third quarter of 2019 delivered a ray of light as revenue and earnings per share exceeded analyst expectations. Though the revenue remained essentially flat year over year, the CEO sees AI growth since regarding the third quarter results. He said on Baidu's new AI business, the voice assistant continues to experience strong momentum with monthly voice queries surpassing 4.2 billion in September, up over 4.5-fold year over year. Apollo, we are excited about our progress in early stage commercialization of smart transportation with the release of Apollo-powered robotaxi pilot program to the public. Baidu is a well-diversified, financially strong company able to nurture AI efforts with its massive audience. The company also has a $1 billion share buyback plan in place. The question for investors is how long until there's a significant payoff. Which risky stock is most likely to reward you in 2020? All three of these picks hold blockbuster potential with the differing degrees of risk to the investor. Baidu appears to be on the right path with the AI and cloud development playing into its massive audience, but results for those efforts aren't showing up in the financials just yet. It deserves a spot on your watch list. Though since a breakout, it could be a while before it breaks out, which makes sense. The medical device manufacturer is in the very early stages of adoption in the U.S., but the speed of the market acceptance and its attention grabbing. The pediatric burn treatment solutions present a huge opportunity, and trials have been underway for almost a year. An endpoint has not yet been determined yet. Zillow's big move with Zillow Offers is demonstrating traction in the markets it serves so far. Revenue results are positive, and management sees profitability ahead. Of three stocks discussed here, the writer thinks that Zillow is the most likely to pay off for investors in 2020. All right, so how do I feel about these stocks? So I probably won't be touching any of them because, as you guys know, I go for dividends and I go for lower risk. So I won't be buying any of these companies. But do you guys like any of these? Either Zillow, Avita Medical, or Baidu? If I had to pick one, I'd probably go for the real estate just because I like real estate. So I'd be going for Zillow if I had to pick one. But let me know, guys. How do you feel about this article? Apparently, all of them have good things in the works from what I read. So that's great. So one's doing AI, technology and cloud. The other's doing a medical device that's already being adopted in the U.S. And the third one is real estate, a pretty popular real estate service that's now buying and selling its own real estate. So that's pretty awesome. But let me know, guys, which one would you buy if you're going to buy any at all? And are there any high risk, high reward stocks that are on your watch list that you're really looking for? I know Tesla's probably going to be on there, but I consider that less risky than some of these. So thank you guys so much for watching. It's been that dividend guy. I just wanted to give you a little alternative to my portfolio here. So thank you guys so much for watching. Remember, this is not financial advice. Again, I'm not going to be buying any of these. So if you do it, if you do and you lose money, it's on you. But thank you guys so much for watching that dividend guy. Remember to hit the subscribe button, and when you do, hit the notification bell so you don't miss any videos I post about my portfolio Monday through Friday. But I also do like to sprinkle videos like this, read some articles, and see some new stocks because I don't want to be stuck in just a dividend mode, right? I like growth stocks as well. I'm just a little bit more biased towards dividends. So thank you guys so much for watching. Thank you for hitting the subscribe button, and I'll see you guys in the next video. Take care.